Hello everyone and welcome to this week's weekly market view for Monday the 30th of May to Friday the 3rd of June 2022. My name is Vishal Subban and I'm the head of trading education for Sharekhan Education. This week we are going to be looking at some key levels on the charts. So let's deep dive down into the charts and let's look at those levels. So here we have the three time frames on the Nifty, the monthly, weekly and the daily chart. Let's quickly have a look at the monthly chart and let's look at the macro picture first. As you can clearly see that Nifty has held this monthly demand zone quite well, and because it has held on to this strong monthly demand zone, the prices are also holding. SGX Nifty on the weekend is showing that we are more or less gapping up. Now whether this move will again bring back the markets to closer to its highs, there have been some obstructions in the way. So some of the key levels to look out for this week is this 16,651 to 16,945, and unless and until this level breaks, we will still see some more selling pressure coming on the Nifty. We can also see that Nifty is at a very crucial point. There's a strong resistance around the 16,400 levels, and there is a possibility of that resistance level breaking. If the price breaks that resistance level, then it will have no hesitation in moving towards this next supply zone, which can potentially act as a market trap. Let's look at Bank Nifty on the higher time frames. If we look at Bank Nifty on the higher time frames, it's playing a very similar role to the role that Nifty is playing. You can see that this monthly demand zone is holding. Bank Nifty is also showing some strength now, and we have had a pretty good move in the past two trading sessions. But Bank Nifty also has some obstructions to the upside, and the one major obstruction will be this level over here, which is a key level of supply. Also it is more or less closer to the 36,000 handle, so it will be interesting to see how Bank Nifty holds on to this level in the coming week. The bias on Bank Nifty remains slightly bullish to the upside, but this supply zone might just spoil Bank Nifty's party. Let's quickly have a look at the USD INR. On the USD INR, the monthly demand zone has held and prices have nicely bounced out of this level. We are more or less making new highs on the USD INR. Now generally whenever the USD INR is making an all-time high, the Nifty generally has a little bit of a selling pressure. But sometimes both the Nifty and the USD INR move in conjunction with each other. So sometimes these correlations do play, sometimes these correlations don't play out the way as expected, but we have to trade as we see on the price chart. Let's look at the Nifty FMCG chart. So this week we are analyzing the Nifty FMCG chart, and if you look at the FMCG sector, we have this supply zone at the top on the monthly chart. Currently this supply zone might look a little far away, however it is there, so we will go ahead and plot it. And prices are coming close to this supply zone on the FMCG chart, right? What does that mean? It means that stocks belonging to the FMCG sector might see some kind of a profit booking coming in if the prices do hit this supply zone, right? At the same time, if you look at the daily chart of the Nifty FMCG, there is something over here on around 41,488 to 42,021. This is this is the area that you need to watch out for, and on the demand zone side you see this area over here. So these are crucial levels on the FMCG sector that might trigger in the coming week. Let's move on to the next stock, which is ITC, and let's do an analysis on the macro picture first. So if you look at ITC has been moving nice and strongly to the upside. It has received a little bit of profit booking in the past 3 to 4 trading sessions. We do have this demand zone that ITC is currently holding, and if ITC does hold on to this level of demand, we might see prices again rising towards these highs of 283, and if the 283 level breaks to the upside, then we might see even more upside coming in on ITC. There is one supply level that one needs to be a little careful of, and that is this gap area here. So maybe if anybody is long on ITC, these are the areas where some profit booking might also come in, right? So we need to be a little careful on ITC as well, that this 324 341 area we might see another sell-off coming in, and this could be pure profit booking. But prices are anyways far right now from the current market price, so the bias on ITC remains long. Let's move on to the next stock, Hindustan Unilever. Now if you look at Hindustan Unilever on the monthly chart, let's remove all the tools here so that we can see the charts nice and clean. So it also has that supply zone that the FMCG chart is showing, right? So this is the time where there is a likely possibility of some profit booking coming in. All right, so just be a little aware of these stocks. And on Hindustan Unilever, we have this one nearest supply zone to watch out for, which is 2451 to 2511, and if prices come around those levels, we might see some sell-off coming in on Hindustan Unilever. Alright, so these are the stocks and the levels for the week. Hope you enjoyed the analysis. Looking forward for next week's analysis. Till then, trade safe, take care, and talk to you soon. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.